Welcome back to Deep Mara Academy. Today, we're going to take a closer look at the Strait of Hormuz. It's one of the most important maritime choke points in the entire world, especially when it comes to the global energy supply. We'll be breaking down its geography, why it's so vital for the economy, and where its vulnerabilities lie.
So here's how we're going to tackle this. First, we'll get our bearings with the geography and strategic importance of the strait. Then we'll dig into the numbers to show just how much of an economic choke point it really is. After that, we'll explore what could happen if things go wrong, the different disruption scenarios, and the knock-on effects for international trade. And finally, we'll look at whether there are any decent alternative routes.
All right, let's jump right in with Section 1, the geographic and strategic context. We need to understand exactly where this waterway is and why its location is so incredibly important.
Okay, so if you look at a map, the Strait of Hormuz is the only sea passage that connects the Persian Gulf to the Gulf of Oman, and from there to the open ocean. It's sandwiched between Iran to the north and an exclave of Oman called the Musandam Governorate to the south.
Now, this is where it gets really interesting. The strait itself is only 21 miles, or about 33 kilometers, wide at its narrowest point, but the part that big ships can actually use is even smaller. There are two lanes, one for traffic going in and one for traffic going out, and each of those lanes is just 2 miles wide, and they're separated by a 2-mile buffer zone. So we're talking about a very tight squeeze for some of the world's biggest ships.
And because of these features, the Strait of Hormuz is what's known as a maritime choke point. The term is pretty self-explanatory, really. It's a bottleneck on a major global sea route that's absolutely vital for energy security. Any kind of disruption there, even a small one, could have a massive impact on global supply chains and energy prices, simply because there's so much traffic and not many other ways to go.
So just how critical is it? In this next section, we're going to put some numbers to it and quantify the incredible volume of energy that passes through this waterway every single day.
Right, get ready for this number. As of 2024, the U.S. Energy Information Administration reports that, on an average day, around 20 million barrels of oil flow through the strait. That's a huge slice of the world's daily energy supply, all passing through that narrow channel. Now, to put that 20 million barrels a day into perspective, it's about 20% of all the petroleum the entire world consumes. It also works out to be more than a quarter of all the oil that's traded by sea. And it's not just oil. About a fifth of the world's liquefied natural gas, or LNG, also passes through, most of that coming from Qatar. So where is all this energy heading? Well, the destinations really tell the story. A massive 84% of the crude oil that goes through the strait is headed for Asia. We're talking about the major industrial economies like China, India, Japan, and South Korea. This just goes to show how deeply reliant they are on this one single route staying open.
Of course, whenever you have so much trade concentrated in one small area, it naturally brings us to the risks involved. So in Section 3, let's analyze the strait's vulnerabilities and what might happen in a disruption scenario.
First, a bit of context. Most defense analysts agree that a full, sustained closure of the strait is pretty unlikely. But, and this is a big but, even a temporary disruption could have such a severe impact that we absolutely have to examine the risks involved.
So how could someone actually try to disrupt traffic? Well, there are a few tactical options. You could deploy sea mines in those narrow shipping lanes. You could use anti-ship missiles fired from the coast. You might see smaller, fast patrol boats being used to harass or stop ships. Or you could even physically block the channel by deliberately sinking a large vessel on the way.
Now, let's imagine one of those scenarios plays out. What would the consequences be for international trade? In Section 4, we'll look at the ripple effects on the global economy.
Well, the immediate effects would be pretty easy to predict, and they wouldn't be good. You'd see massive delays in energy supplies. That lack of supply would cause global energy prices to surge. Shipping insurance premiums would absolutely skyrocket. And of course, it would become much more dangerous for the ships and the crews trying to operate in that region.
And just how high could prices go? Well, to give you an idea, one analysis by Forbes estimated that if you cut global oil supply by just 10%, it could cause prices to jump by a staggering 250%. That gives you a sense of just how volatile the market could become.
And let's talk more about that insurance cost. Back in the 1980s, during the so-called tanker war risk premiums for ships going into the Gulf shot up to 7.5% of the ship's entire value. Analysts figure that a modern blockade could easily cause premiums to jump by at least 5%. For a large crude carrier, that's millions of pounds in extra cost for a single voyage.
So with all these risks, the obvious question is, can't we just find another way? Are there any viable alternatives to the Strait of Hormuz? That's what we'll look at in our final section.
There are two main overland pipelines that were built to bypass the strait. Saudi Arabia has the East-West Pipeline, or Petroline, which can get crude oil over to the Red Sea. And the United Arab Emirates has a pipeline that takes oil from near Abu Dhabi to the port of Fujairah, which is outside the strait on the Gulf of Oman.
But, and this is the crucial point, just look at the difference in capacity. The strait handles about 20 million barrels per day. The total unused capacity of those bypass pipelines is only around 3.5 million barrels per day. It's not even in the same ballpark. So the conclusion here is pretty stark. The existing pipeline infrastructure could help soften the blow, but it can only handle a tiny fraction of the oil that normally goes through the strait. In the event of a full shutdown, it wouldn't be nearly enough to prevent a major global supply shock.
Really, the limitations come down to three things. First, as we've seen, the capacity just isn't there. Second, these overland pipelines are themselves vulnerable to attack. And third, you can't just build more pipelines overnight. It's an incredibly expensive multi-year project, so it's not a short-term fix. So we end up with this profound reliance on a single, vulnerable waterway, with very few alternatives. This concentrated vulnerability really raises some fundamental questions for the future of global energy security and for the international laws that are supposed to guarantee freedom of navigation. Thank you for listening, and we look forward to seeing you again soon. If you derive value from our content, please consider sharing it with the world. Goodbye, and continue learning.